But we got to cheer up. We got to find something to talk about. That's why I'm bringing on Sean Udall. We got a lot to talk about today, folks. We got to talk about Europe, stocks, valuations. Let's get to it. Roll the intro, Aaron.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, folks, my intro says it all here. We're just trading in the red. The only thing that's up substantially is the buck, and that's not good. We'll discuss that with Sean. S&P futures, little rally, just 10 points over the close, and then just too much news going on. We're down 47 in handles at 37.25. Man, the dollar is adding another dollar, up 93.5 cents at 112.04. TLT, new low of the move yesterday, continuing lower, down 71 cents, 104.56. You have crude now flirting with $80, down 296 at 80.53. Gold getting shellacked, down $27, 16.54. Silver, that's clinging to $19. We did trade under it, down 58 cents at 19.03. And Bitcoin futures down $495 at 18,800. And Ethereum futures are down $39.50. Let's stop the screen share here and let's bring on Sean Udall, the tech stock strategist.
Good morning, Benzinga.
Boy, that was, can we do that a little bit better?
No, I purposely did it in about as subdued a manner as I can, because I think we need to take stock in just the subdued nature of what the world is ebbing into. So I don't want to portray false enthusiasm.
Okay. I like that. Okay. So I told you I was going to hit you with something at the top of the show.
Uh-huh. And we do have a lot to talk about. So I gotta save some energy.
Yes. So we, seasonal patterns, right? We all know that, month of September is historically a weak month. But there's one other pattern, and I'm going to write the seasonal pattern, and I'm going to write about the article today. I do it once a year, and the Jewish holidays are coming up on Monday. I won't be here on Monday. I need a break, and there's a popular adage that says sell Rosh Hashanah and buy Yom Kippur. Well, this is the last trade. You do it leading up to Rosh Hashanah, so all week, you're supposed to be selling the market. The reason you're supposed to be selling the market is you're coming up on the new year, and you're going to be with your family, and you're coming up on the Day of Atonement, and you're supposed to just focus on your family, your religion, things that you did right, you did wrong, so you shouldn't worry about your investments, right? So it's sell Rosh Hashanah, and then 10 days later, you come back and you buy Yom Kippur. Well, they're certainly selling Rosh Hashanah here. I just don't know if they're going to buy Yom Kippur.
Is today the start of it? And is it 10 days from today?
Last trading day. Today's the last trading day. So they call it Erev Rosh Hashanah Sunday night, right? That's like when you go to services the first night, and then Monday I won't be here. It's the official first day. And then, so today's the last trading day to sell. And, of course you could do it, the whole time, going into it. So coming off the quad witch, and that seasonal pattern is, definitely coming into play here. And there it is. So sell Rosh Hashanah is working good. I'll look at it from last year. I'll do an article a little bit later on it. But I just wanted you to be aware of that seasonal pattern. And and then Yom Kippur is coming. It will be a week from Wednesday, so the next trading day of where you're
Okay.
supposed to redeploy your assets. So I don't know how far the market could go down here between now and next Wednesday. Certainly the June lows on target, but I guess we got to talk about the biggest catalyst here, and I'm going to screen my share and do the screen share here, and know what. No one likes what's going on in Europe here. I mean, that's it. Weak data. They plan tax cuts. I mean, let's just talk about how the dollar is affecting this, and Europe's in shambles, and looks like we're following them that way.
Yeah, and this is something we quit doing our Friday show. That's mostly due to me because that 6 to 6:30 time was very tough. Right in front of the open. Maybe we re-engaged that at some other time slot. But we did that many weeks in a row during a lot of this correction. And one of the things I talked about, I mean, Gene Munster and I were on 6 months ago. I think you're going to have him on this morning. But one of the things I talked about was, the Fed, if the Fed hikes too much, which I was against the Fed hiking 12.25s, which we're way above 12.25s now, I think. But you basically are morphing into, some kind of a crisis, right? So everybody wants to remember '08. I can't really remember, I can't really remember the last time we had a currency crisis. It honestly might have been in 1998. I'm sure you remember when Greenspan cut rates in '98 in the middle of a really strong bull market. We were having a hell of a correction at the time. But I really can't remember the last true kind of currency crisis. But what we have is a very strong dollar that doesn't seem to want to stop going up. You have other central banks around the world sort of panicking and raising rates to fight inflation that's probably already dropped way more than they think it has. We could talk about that later. But the whole point is, everybody's been saying this. I was hoping we would avoid it, but the Fed hikes until they break something, right? So, and I was talking about that. I thought we were in a recession months ago. The first two quarters of the year, we had negative GDP. The traditional definition of a recession is 2 negative quarters of GDP. Nobody wants to say the first half of the year was a recession. They keep waiting for one to show up, and guess what? We're in one. So if you wrap it all up in a 30-second package, you have strong dollar. The Fed's already overshot. I keep waiting for somebody of note, like Kramer was in 2007, to basically kind of have a they know nothing moment, right? In fact, I was talking about that on my feed this week. That, hey, isn't it strange that nobody's basically been critical of the Fed? By the way, Joel, there's one person who's never been a real champion of business historically. Maybe she has been behind the scenes, but in the political world, I don't think she's known as a real champion of business and economic growth and things like that. But Elizabeth Warren is a person who I 100% think she's on the right side of this particular view, that Powell's really making a huge mistake. So I can you recall anybody besides her that has been publicly critical of Powell? That's about the only person. David Kelly is a really good economist. He's been somewhat critical, and he's definitely of my view that the Fed's already hiked too much. They should already be slowing down the hikes, if not even already pausing. I don't think he even advocated more than 175 basis point hike. So anyway, wrapping it all up in the shortest way possible, you basically have a currency kind of blowout happening. The UK, that's a currency issue, right? And so what we were talking about before we went live is, in effect, the strong dollar is making inflation even worse for people who have to settle in dollar that are in a different currency, right? So let's say you're in the UK, you're a company or you're a business or whatever, and you're buying stuff and you got to translate to the dollar. Well, if the dollar's up 20% versus your currency, well, guess what? You got to pay 20% more on top of the inflation you're already seeing. So I really don't. It's like, does the Fed think about these things? Sometimes you get what's the expression? You get 400 PhDs at the Fed, and yet all they seem to do is kind of drive the vehicle in a rear view mirror. But there was the last thing I'll say on just this macro thing is that somebody said it really well on CNBC. Again, it's something you and I said. I said it at least 3 or 4 times, that the Fed keeps saying they're data dependent. Well, they seem to ignore all current data except one thing, which is CPI, which is a very lagging index. We always knew it was lagging a lot, but now I think we know it lags about 3 months. Might even some of the inputs might even lag more than that. And people say, hey, if the way to check this is check used car prices and go back to the first time that used car prices dropped in the CPI report. Used car prices have been dropping for multiple months this year, but it took, there was one CPI report where I think everybody thought, okay, this one's going to ease a little bit. I want to say it was April's, by the way. And used car prices had dropped for like 2 months in a row. And yet in that CPI report, used car prices were higher again. So used car prices didn't show as lower until the next month. And so that literally was 3 months after the first month that used car prices dropped. So CPI is very lagging. The jobs data is very lagging. We could talk about jobs too. I have a totally different view on jobs, but that's a different subject. So anyway, the Fed is basically sort of jamming rates down our throat and basically ignoring current data, which really points to a very, very rapid slowdown. And I haven't even mentioned how bad stocks are. Stocks are the leading indicator of economic activity, and stocks have been dropping since November. So, but as you can look at any, I mean, when's the last time we had a positive regional PMI report? You know, the Empire Index.
Right.
And
Yep.
You know, they're all the PMIs. They all have names, but they're basically each of the regional PMIs from each Fed region. I mean, and these things have been crazy low. They're seeing negative numbers that we haven't seen since 2008-9. So,
there's a couple things here. I mean, I mean, you just gotta. I mean, the transitory thing, right? I still think that really, what is really coming to a culmination now is it's still the shock of the aftershock of the pandemic. I mean, those are things that aren't easily figured into economic models, right?
no,
And
they were never modeled before,
they were never
right?
correct. So. I mean, I wouldn't want to be I wouldn't be in his shoes. But to just go to the employment situation.
Sure.
To me, I mean, I still see help wanted. I still see people, in my wife's office, they can't find people to work. So I just think, man, oh man, I mean, that's I guess that's going to be the last shoe to drop, but unemployment is moving up a little bit, but I can't be hiding my under my desk fearing a recession when you have this kind of low unemployment.
Yeah. Well, I don't know if you should fear recession. I would say the markets are overreacting to the fear of a recession as one of about 3 or 4 fears that they're reacting to. But I mean, here's my view on jobs. If you can talk about help wanted signs, this, but I think the jobs numbers, and I have several people that have done some pretty deep digging on this. First of all, every time a new jobs report comes out, it's pretty hot. Nobody tends to look at the revisions. All the revisions for months are all revised. I haven't seen one revision higher. They're all revised lower. So you go. Like in fact, that what started this current sell-off was actually wasn't the it was basically the jobs number, and then a week later we had that hot CPI number. So, and I'm not talking. This is like a micro. Like we had a little burst higher, a week or two ago, like a 3-day move. And then we had, it was either the jobs number or the CPI, but the jobs number was the thing that really kind of spooked people. But again, the prior 2 months were revised lower. But I think the reason that so many the jobs numbers aren't equal. How many times have we seen layoff announcements? And
We've seen a lot of that. I know.
dude, we've seen a ton. I mean, there's actually, you could Google search some. I don't have the link in front of me, but there's some layoff trackers. There's massive numbers of layoffs. So I think what's happening is there's lots of people. So if how the jobs numbers are, I'm pretty sure somebody could double check this. If you have somebody that already has a job and goes out and gets another job, that counts as a new job. So you have a lot of people working part-time, more than one job. And you might even have people that have a partial home-based business working a part-time job. But I think that's the issue. You have lots of people going out and getting low-paying jobs or part-time jobs. I think adding a part-time job is basically the equivalent of somebody losing a white-collar job because they got laid off.
Different ways to measure it. Yeah, definitely different ways to measure it. All right, let's go put this on pause for a second because we can go back and forth. I mean,
I don't want to spend too much time talking about jobs numbers.
Yeah, no, but we customary to go through some of the news and some of the earnings and some of the movers, and I'm just gonna just do two right here. We had after the close, we had Costco, and boy, I was looking at the numbers. Their 420 beat their 416. Sales 72.09 billion beat to 72.06 billion. I'm just seeing some other good things here. This was just a blowout quarter. I think this is the most. I was looking at the historical numbers. I mean, this is like this EPS is almost like $1 better than any EPS it's had, and I think that this the revenues and the sales was maybe the highest by like 20 billion. But man, it's just a bad, it's a bad day. It's a bad economic environment or just a bad day to report earnings. And you see what happened at Costco. Well, it's been selling off since that CPI report, just right along with everything else. So you see that they hit it yesterday. It started to come back. Let's just look. It's trading down 12.19. It hit a pre-market low of just under 470. So that pre-market low comes in at 469 even. So that's $6 away. We can kind of keep an eye on that. Really not on anything on the monthlies. I see a next monthly low at 443.20. I'm sure. I don't know. I'm saying I'm sure, but that's a long way to go. Now I know this really isn't a tech stock or anything, but it is something that's reflective of the consumer. And I guess, in my opinion, the streak, it doesn't get any better than this for Costco. So, what's your take on the Costco wholesaler?
Well, Costco is really, truly one of the great American companies, and it's one of the. I don't know if it's a super disruptive company. Maybe it was back in the day. I mean, they're opening a box store is probably not considered disruptive, but if you think about to run it right and to do it really well and to do it better than everybody else means that you are deploying a lot of advanced stuff, whether it's tech, whether it's logistics, whether it's agreements with your distributors, et cetera, getting stuff in the stores, having the right products that people want seasonally. I could go on and on and on about the brilliance of how Costco runs their business. I've been a Costco member most of my adult life. Yeah. I mean, you want to talk about the anti-inflation fighter? It's Costco. I mean, one thing I'll say, and a lot of people bitch about inflation and stuff like this, and I hear it, but honest to God, and then, hey, I don't own any Costco stock. I wish I did. I did own it years ago, but I'm buying stuff at Costco today, Joel, for the exact same price I paid for Costco stuff 15, 20 years ago. I'm not exaggerating. I'm not. So
what's that? What?
Tons of stuff, and
really?
then we could even talk about just if you look at the savings you get, right? They deliver. Hey, what was everybody doing? The one thing I hated doing is waiting in a Costco gas line to get gas here the last couple months. Gas is now lower again. That didn't last very long, did it? Right? Remember the panic over high gas prices? What lasted about
Starting to come down. Yep.
Oh, it's come. We're basically back to. I think gas prices are almost back to where they were pre-Ukraine invasion. If they're not there, they're within 15, 20 cents. But anyway, so as much as I hated waiting in the Costco gas line, and by the way, other gas stations around like all over the place are empty. But at Costco, you got to wait 15 minutes to get gas or 10 minutes to get gas. And normally you don't have to wait more than 30 seconds. So I don't know, man. Like Costco, Walmart, they're doing their part to fight inflation. As far as the stock right here, right now, you just look at that weekly chart you have.
The monthly's on the bottom right.
Okay, the monthly is the one bottom right.
Yeah.
Hey, I mean, it's a store of value. It's been a harbor from the storm. At some point, these stocks get sold. I mean, Costco has probably priced in a lot of years of good news at this point. I mean, I remember when this is one of the stocks you can, I always talk about PEs and tech, and they don't really mix. Well, you can use PEs in lots of other spaces. You could use PE for, Costco used to trade at a really low PE.
Yeah.
Now it's probably, I could look it up, but I'm going to guess. I'm going to guess their PE is like 35-ish or something like that. So, hey, you can't fault the company, but everybody keeps buying Costco stock because it's a winner and people love to go to the winners. I'm not going to criticize the company. This is not a stock I would buy right now. I think Walmart's a better buy than
Okay.
Costco.
Take a quick look at the Walmart chart here.
And that's not exactly been a poor performer either, but there's at least more value there. Costco, Walmart is picking up customers. They've talked about that. The trading down. Wealthier people are now going to Walmart. Middle income people are now going to Walmart. Things like that. So. But anyway, I mean,
we'll move on. We'll move on. Yeah, we'll move on from that. We'll go to FedEx and the bellwether for the economy. If you think about the warnings, I think that this really had a
this
really hurt people. It hurt the Amazon. It just if you tried to take the optimistic point of view, well, it was just because people are going to stores more and not buying online, and they don't need to they don't need it delivered. But let's see. They came out here with their numbers, and let me go to my FedEx. Let me go to my calendar here.
While you're looking, there shouldn't be much surprise since they did, the big pre-announcement. Lower.
Exactly. Yeah, they did. They beat the lower number. Came in at 344, and it was at 335. They did have a substantial revenue miss here, sales miss. The street was looking for 24.01 billion on the revision. They came in at 23,242. I mean, the stock had already been hit. It's getting hit again. Not often do you see a gap on a monthly chart being filled, but that's where it's at, and it's just sitting there, and it's not bouncing. So I think there's probably someone on the desk has some more to go. Your next monthly low comes in at 127.29. I don't think it's going to drop another $23 today. But is this something that after the considerable haircut that it's taken, is it anything that's coming close to any of your your models? I know once again this isn't a tech stock, but anything positive to say about FedEx?
I mean, I think if somebody were to buy it here, once you get back to a market that's not down 4 out of every 5 days, you'll definitely make money from this price in this stock. I think that the problem for FedEx right now, there's two. One, we'll find out how much is all macro for FedEx versus the fact that UPS just does look like a better outfit. And I think, again, as we could talk about Costco versus almost all other retailers, they've sort of feasted by taking market share from everybody else. I don't think FedEx has grown market share for a long time. DHL, UPS is the big name, but there's even private companies that are doing logistics now. I think here's the other thing I think people forget about. I think at one point FedEx did a massive amount of shipping for Amazon. I'm sure they still do. But Amazon has basically built a logistics company. So instead of outsourcing lots of stuff, they now have their own logistics. Now, they still use FedEx and UPS, but I'm pretty sure they have their own fleet of planes now. I'm sure it's growing. We see Amazon trucks everywhere, right? So they self-deliver a lot of their own products. Again, not all, but a lot. So I think the one thing that is, you can't really sit, like, if Amazon has had a separate tracking stock for its logistics business, boy, you would see a massive amount of market share that they've gained, or basically they've taken back from people that they used to use. So that's a one thing that's hard for, I think, a lot of people that don't understand this stuff very deeply. But the combination of probably a better run UPS and Amazon doing a lot of their in-house has basically, eroded FedEx's market share. But I think when we see the UPS, so the tough part about this market is nobody really wants to look. So let's say that UPS is, 50% just other people doing better than them and 50% macro. In this market, you don't have another report to compare it to for weeks. And in a negative market, if there's an excuse to hit a stock like FedEx, they're going to hit it.
Exactly.
So I would suspect, that other stuff is going to work better than them. Here's just a real simple issue. I believe the new I can't remember what month they actually gave a pretty rosy forecast. I'm not sure if that's the right word. I don't know if it was a plan, but I think it was. I think they might have even raised numbers like as little as it might have been June, but honestly, it might have been just 6 weeks ago. Again, I don't follow FedEx closely, but I know enough to know the general story. They did basically raise numbers or give a good outlook just weeks ago. If it wasn't weeks ago, it was June
Really?
at
Was
the very
it?
latest.
Yeah, I'm not sure. I remember that.
And so we could look at the chart on them. Whenever the stock had a big run,
a pop.
it did. Had a pop.
Yeah.
And so in a bear market, man, when you say positive things and then the next quarter you guide lower, boom.
Punish.
There's just no, and even if you should only be down 12%, you're going to be down 25%. It's just, there's no, that is the danger. If you see business conditions sort of short-term good and you give a good forecast, and then the next quarter you have to lower numbers, that's a one thing you don't want to do.
Yeah.
Yes.
Yep.
But by the way, we can talk about this later. I'll queue up a subject for you to tee off later.
Okay. Let me. I
was just gonna say, let's talk about companies that have already lowered the bar. So anyway, that's all I was gonna say.
Okay.
I would rather see companies lower the bar, right, ahead of time versus have to fess up later. Anyway, that's all I was going to say.
That's good. That's I just wanted to get to one other news item, and then we can go to that. Sean, I know you're going to share your charts. For you folks that are just tuning in, Triple D still under the weather here. So he is not in. So I brought my guest host, Sean Udall, who has a unique fundamental approach to the markets and also very technical. So I'm bringing Sean on today to help me out on this, which is not a good Friday. S&Ps are 10. The only thing I can say on the positive is we're off the low of the session. Low of the session is 37.1675, and just a little dead cat bounce above that. One other stock with news is been Boeing. And Boeing is going to pay a $200 million fine to settle SEC charges on misleading about 737 MAX safety. This stock has just never really been able to get out of that. I mean, it did have a rally when it got into double digits, selling off, high beta with the market. They're hitting this thing. Let's see, down 271, 63,000 shares or 60,000 shares have traded. I'm looking to the left here, and I see the July lows at 135. That's an easy shot. But I think that what we have to think about for not only the index and the individual stocks is the June lows. I mean, and I've been saying for a long time, people are like, "Oh, go down, test the June low, and then test it and go back up." I don't want to go. I don't want to go back down there. And we're getting closer and closer. I think just want to look basis the front month contract here in the S&P. We are now trading the December contract. But basis the front month contract, what was that June low? Huh, it's getting close, 3655 .75. So let's switch subjects here, Sean, and I'm going to stop on my screen share here. And you said, okay, let's talk about some companies that are not raising the bar, but they're lowering the bar. And then it's easier to high jump over, a lower bar than a higher bar. So I'm giving the controls over here. I stopped my screen share. Let's run through a couple of these stocks and hear what your scenarios and possible entry points are.
Sure. Okay. Can you see what I'm looking at right now?
Yes. Whoo! It looks like a spirograph.
Okay. So you got Roblox here. Okay. So this is a good example. So I have a couple simple trend lines here. Oh, the spy. So by the way, this is an interesting, interesting little technique. So I just have EMA bands here. So you could just do literally just go 10 to 100 on this. But it's I like it because see right here where you get the flip. If I even call it probably the last good exit. So when all your EMAs start rolling over and the stock goes below the 100 EMA, look at how high Roblox. I mean, you still could have got out of that stock at about $100. Now it was quite a bit higher, but 100 is a lot better than 20 or 25 at the low. Now we can talk about some index levels too, because I was in the camp that I thought we would hold the May, June, July, whatever the respective index lows were. I sort of thought I wasn't going to say I was 100% confident that they were going to hold, but I was sort of 75-25. But if you look at Roblox, what I like, they had a double confessional, and they lowered once. That got the stock probably down to about 40. They lowered again, and that was into the teeth of the bear market. That got the stock down into the low 20s. I do own this stock. I bought it off of the June lows, basically. And I was sort of saying, if you wanted to stop, you had the May lows. But this stock has held a lot of value. It's probably going to leak a little more. But I would do a simple fib retracement on it, which I didn't draw. I drew this ahead of time. But
that's what I'm doing right now.
And, it might be pretty close to it.
Yeah,
right now.
I'm looking. I mean, I don't have the exact numbers here. Let me see. What was the? I love my 50%. It's actually below it. Because
it probably is below. Yeah.
Yeah.
But by the way, do you ever do the 50 of the 50? So basically it's 75. But a lot of times what I do is I do the 50 of the 50. So you do 50 off the low to the recent high. And then you can do a fit that, once you're at that halfway point, you basically say, like, what's another 50 to the low? And if a stock, and what the key is, if a stock does hold the prior low, that usually is a very high probability jumping off point. So I'm going to eyeball it and just say it's about 28 to 30 bucks is that area. So here's the thing about Roblox. So I always look at technicals, but I always have an underlying fundamental thesis. I actually think Roblox has better odds than most companies now of starting to report better. So they had the double confessional. They basically lowered numbers twice. By the way, they might have lowered numbers 3 times. I know they've lowered numbers twice. Now, this may seem dip. Now, I don't know if I would advocate this in a bull market, by the way, the strategy. But in a bear market, I think you want to find companies that have basically, especially that are high quality leadership companies, that have lowered numbers, because they've recognized you should value companies who've recognized the situation earlier than other people, because they're managing their business better. They're ahead of the curve. right? So, but the most interesting thing about Roblox is I think there's fairly good odds that their numbers actually started improving again. And, they did have a lot of pull forward of their business. Now, all those tough comps are out of the way now. So now you have they're comping against low numbers. They've already done the double confessional, and they've lowered the bar. I think the odds of them beating numbers are fairly good, and they just have a great business anyway. The other number, if you want, I can pull up Unity. Unity was very early in. We can talk about Twilio here in a sec. So Unity also now this one it's leaked a lot more, but I would have no problem buying Unity at or around its prior low. I think that prior low is basically a ridiculous low. I like their merger that they bought. In fact, they bought a de-SPAC company called Iron Source, and I think they bought it for a really good price. They're going to end up paying about 35 to 40% of the $10 SPAC price. That's a pretty good buy. So I think the combination of that M&A they're doing, this one has leaked. This was a very nice trade for me. Actually, I caught this off of a couple different times, but the best trade was off the Malos. I don't have it anymore. But I am looking at this. I think this is one of the sort of the top names in its group. And then another, not that we need more themes, but another theme I am actively seeking, and both these companies fit it. These are basically of the IPO class of like 20 and 21. And we had some tremendously great companies IPO, but what happened? They IPO'd into a overly hot market, and the stocks were priced too high, and then they went up. They probably doubled or more, right? I mean, in fact, there's I don't know that around this might go back to close to the Unity IPO, the initial price, but the bottom line is you have stock was 210. I don't know how much overvalued. I have fair value on the stock about $70.
$70. Wow.
Yeah, $70. And in a good market, you'll have stocks trade well above fair value. And obviously in a bear market or a crash market, you have stocks don't even trade anywhere close to fair value. But I think this company has a lot of value. There was even a company called AppLovin, another stock I like. But AppLovin put in a wing and a prayer M&A deal, because I think they knew, hey, if we could somehow buy Unity, it's a home run. Well, the deal didn't go through. It was almost a little bit of a laughable M&A proposal, to be honest.
I remember that.
They gave it a go. They recognized the value. And man alive, if you want to talk about a combined entity that would be a future Costco in this respective space, it would be a very, very the combination of App and Unity would be crazy dominant. Neither of those companies though need to merge with the other one. I think they're probably better off on their own. But anyway, this one, Unity has lowered numbers at least once, and I think twice as well. So those are at least two ideas of things that I think are actually just really good values. You got a tremendous amount of growth, and guess what? No, they're not making money. But what are we seeing now, Joel? Remember when it was, the companies are making money, they're not going down. Well, Meta's sure gone down a lot. I still have a hard time calling it Meta. Microsoft has held better, but the bottom line is profitable tech just ended up dropping after other stuff, right? So the whole thing about, profitable tech's not going to drop. Well, that only lasted for about a quarter. And then the bear market has taken those stocks down too. I don't. Oh, go ahead.
Let's. I just want to see that just on this theme, we did Unity and Roblox. Do you have one more that?
I was actually going to mention Netflix. So, and interestingly, Netflix has already seen what I call the analyst turn. So analysts are, got super basically bared up after, guess what? Netflix double confessionaled. So you can see it very clearly here. Lowered numbers or missed numbers, did it again. And, I didn't buy any, but I did advise. I did say Netflix was a really good buy for 2 or 3 months, basically, when it was kind of around those low levels. I basically said I thought anything under 190 was very good value for it. And
quite a bit
it hasn't gone up a whole lot, but analysts are actually already warming to it.
They did. They've turned a little bit. Yep.
Yep.
In the last week, and we had Michael Pachter from Wedbush Securities on at the close yesterday, and he was bearish the stock for a long time and got buried on it. It turned around, and
But by the way, is Pachter now bullish? I
yes, he is.
Okay,
Yes.
but I remember he stayed bearish on it from about 25 to whatever, right?
Yeah.
No exaggeration. I mean, for years. Now I agreed with him the last 2 or 3 years, right? This was never one of my favorites, to be honest, too, because the whole time Netflix was going up, you could have ridden Facebook or Apple or Google, and there were other names I'll freely admit that I like better than Netflix. But no, after the 2 misses, and I do think, again, I always like to think about fundamentals. I actually think the ad model that they're going to bring out, I can't believe people aren't putting much higher numbers in for what the potential for the ad model business is. Because
they're I forget what there was a fancy term. We also had another Wedbush analyst on Wednesday's show, and I can't believe, maybe the chat can help me. Actually, the chat kind of understood, but it was like CPMs or something along those.
it's basically the cost per user, cost per
Yeah.
head, but it's basically what they can charge, right, per metric ad unit, I think, is the technical mumbo jumbo on that, and their ad rates. So there's 2 theories, though. We haven't really seen what, here's what I think would be the home run for them. That they actually do a near free subscription that's ad based. So they actually, what everybody seems to think they're going to do is just have expensive targeted ads with a slightly cheaper subscription. And they may do that. So, so you don't get flooded with ads, but maybe you only have to watch 2 or 3 ads for a 30-minute show or something like that.
Yeah, it's a small amount.
But think about the audience they could get if they said, okay, here's free Netflix, but you're going to watch quite a few ads to watch a show, but you don't have to pay anything. Think about the ad revenue they could get on something like that. So I almost think they could actually have 2 ad tiers. They could have basically a free or close to free. And then they could have, let's call it the premium ad tier, where you have limited ads. You still have to pay a subscription. So far, that's the only piece I've heard about. Either way, I mean, this is a multi-billion-dollar revenue stream that I don't think is getting any credit at all in the stock price, personally.
Okay. All right. Let's go to some of the big cap tech here, and of course we got Gene Munster coming on at the top of the hour here to give his view on some of these things. But a lot of times, Sean, you talk about a stock and you throw out a number and you say, "Wow, if this is what I'm waiting for this to come down to." And,
let's hit a bunch of these.
And I'm like, I don't know if it's going that low, and I can't remember what you gave me on Meta, but here we are, almost back to the COVID low, 137.10. We can keep your charts up if you want, or I can show mine.
Either way, you could. These are just simple. If you want to just do simple ones, you can just throw them up one at a time if you want. I have most of these in that chart list, but you tell me what you want to do.
Well, we can. I mean, people look at my charts a lot, so we can look at yours. But let's just talk about Meta here. Getting very close to that the COVID low at 137.10, traded down $1.70 this morning. Boy, once
so here I'm pulling up the weekly. Okay, can you see it?
Yeah. Yep.
Okay, so it's so funny you brought this up. So here's another thing I'm looking at. I'm not just looking at the COVID low. I'm looking at the late 2018 low, which was also a completely Fed driven, like just a dumb Fed driven bear market. But it was only a 3-month bear, right? But it was pretty punishing at the time. But this is another thing I'm looking for. Not only like what stocks not only are at or below the COVID lows, but are they challenging that 2018, that late 2018 low? Now, people can say whatever they want about Meta. Okay, I could talk fundamentals all day long. This was one of my top holdings back as early as 2013. And I know this company very, very well. I don't believe for a second that they're spending too much money on the metaverse investment.
Really?
I don't believe for a second that it's a broken company now. I don't believe like all these narratives. Now, was it a stock that had likely gotten ahead of itself? I mean, there was a reason I had gotten out of this. I thought it was too expensive at 225 to 250. Okay, and it hit almost 225 in mid 2018. So I thought the stock had kind of gotten overpriced back all the way as early as that point. So the bottom line is, you want to put a PE? Go ahead, put a PE on it. But I think the best way I would measure Meta is on cash flow generation. And it's the same basic. I think Meta today is a very similar thesis to Apple in 2013. I have no trouble saying that this is one of the best large cap, mega cap companies, period, not just tech. I would rank, like, I would much rather buy Meta than Costco. I would much rather buy Meta than, I don't know, give me any large cap I'd much rather buy Meta than any oil stock, et cetera, et cetera, et cetera. This ranks very high in my view. Again, is it going to work this quarter? Don't know. Like if you're buying something now, you better be prepared to hold it till March of next year minimum. So, unless you have a technical trade, right? You can trade, you can short-term trade whatever you want. But I mean, this is one of these kind of opportunities. You go back and you look. I remember in 2016, Square was a $15 stock, and 2 years later, I was kicking myself for having sold it for I think about an 80% gain at around 18 to 22, and we all know where Square went, right? So, so this one, so I mean, Google's very attractive. I think Meta's a better buy. I think Meta's a better buy than Facebook. So again, they also were early. They were early. They lowered numbers before other people. They talked about macro weakness before other people. They recognized what was happening before. Again, I'd rather have a company that's on top of the ball and knows what's going on than companies that figure it out 6 months after everybody else, right? So short term, we don't, whatever's going to happen is going to happen. But this is a hell of a good company generating a lot of cash. And, people think they've they may have over monetized core Facebook, but they have assets that in the WhatsApp asset.
Yeah, exactly.
You correct me if I'm wrong, but I don't think they've yet to have a single ad on WhatsApp. So I don't think they've monetized WhatsApp at all.
You mentioned,
but no,
you mentioned Google.
Yeah, sure. Go ahead.
That Google's already taken out its June low.
Yeah, let's here. I'll put Google on the weekly. Oh, here's the issue though. Well, do you want to buy a stock that's still 2x above the COVID and the 2018 low?
Yeah.
Which again, if your opinion that Google is just vastly superior to Meta, then that's your opinion, and you're not going to be looking at Meta in the first place, right? But if you're somebody who's looking at Meta, I would at least just say this: do your own work and compare Meta to Google and see which company you like better. Pretty easy decision for me.
All right, let's go on to I'm just looking at this one. You're right; it's still quite a bit above the COVID low, under $100. The split really didn't do much for it. What I noticed on this one was, when the market, the overall, the S&P. I mean, this is the top component. Overall, the market, had that 150% rally, and then some. And then Google just absolutely refused to even go anywhere near a 50%. So yeah,
I
right.
think Google's a pretty easy. So here's what I would say about Google. If the market just keeps descending and we go to S&P 3200 or 3K, what kind of these max numbers that the bears are saying, Google will hold more value than other stuff. It will go down less, right? It'll be like Costco. But when the turn comes, I think Google will advance a lot less than lots of other stuff. So I think it's kind of a beta trade. I think you'd agree.
All right, we got a quick. I see that I got the screen back here, so let me share a chart. Someone asked if you still like RELY.
I do. It's fun. It's funny. I don't get too many mentions on that. Again, this would be one of those. I do have a pretty good list of stocks that IPO'd in 2020 or 2021. This is definitely a stock in that IPO class. It's actually just been really flat. So same thing though. It probably put in a low a lot earlier than lots of other stocks. It's basically held a low. Are you pulling it up? Do you want? Or
Yeah, no, I am.
Hey, Joel, yeah, you got to share your screen again.
Okay.
Okay.
Yeah, I'm just got all these windows open.
Yeah,
that I
this
usually
one
do.
doesn't have a long history, so we don't. We can use a relatively short chart.
Okay.
I believe the IPO was it might have been as early as like September, October. This might only be about a 1-year-old company, to be honest. But no,
Yeah.
so IPO, very nice business. This is the disruptor versus the old guard of like Western Union. So it's an interesting company. It just metrics are good. Again, people that like growth and just want really undervalued assets that have really like I don't even like the IPO was high, but I thought this stock was already reasonable at about I want to say I started digging into it probably 17 to 20. And I didn't think it was expensive at $20. That was relatively cheap on most growth metrics, and it's got cut in half again. So I mean, dude, there's hundreds of these right now. There's literally hundreds of stocks that are great growers that are just at decimation. I mean, we've had a true crash. This is not a minor correction. It seems like the media wants to kind of pretend. I mean, even the S&P was down almost 30%. The NASDAQ at one point, we're getting close. NASDAQ was down, I think, 35. The IWO, the IWM were down 40 to 45%. These are crashes. But underneath the surface, this is this thing where so many stocks are down far more than the indices. But no, Rely is one of 50 to 100 great little growth gems that are out there. The trouble for a Rely short term is probably the competition for investment dollar. So what I mean by that is how many people are going to buy a Twilio or an Okta or a DraftKings or just things that are better, or Netflix or Meta. So that you need a true risk on kind of recovery for stocks like Rely to probably pick up steam.
The monthly looks, I mean, a little bit better than some of these other charts. It made that.
Well, it's basing now, right?
Yeah.
It actually hit its low earlier than most other stocks, and it's kind of been basing ever since. So I'm looking at my own daily chart. I mean, they're not much lower now. In fact, it's interesting. A lot of mid cap, small cap, mid cap tech is not really going to lower lows now. Whereas the mega caps are going to lower lows, which is something, again, we might have talked about that as March, April, if I remember. But this hasn't gone much below the March lows. It did go a little lower. It went lower, went lower, bounce. But basically, it's kind of held the March lows. And I tell you what, it's hard to find a tech stock that held the March lows. It really is. So I don't know if you want to buy these things all at once, but I would definitely make a list that, like, people can do a screen, make a list of the IPO class of 2021, make a list of stocks that basically, bottomed earlier in February, March, and largely have held those lows. Because those stocks, if they hold that base, when they do move, the longer the base, the greater the space.
Yeah,
When
that's what they
these
say.
things, when these things do catch wind, and it'll probably be about a quarter or so after the mega caps start healing, but you're going to see some huge moves. Out of, again, it's not just going to be 10. The hardest part's going to be differentiating between these. But yeah, no, this is an interesting name, good name, very good company, very they're just taking market share. And there's lots of market share to take. It's another stock we could mention kind of like this is like a Sentinel One. So
Yeah, you've mentioned that one before.
Yeah,
The
that's
letter
ticker symbol
S, right?
S. Yeah.
Bad day yesterday.
Yeah, so bad day, but there again, probably set lows earlier than most others. They've actually kept reporting surprise. I'd actually probably prefer it if they'd lowered some, but they don't have any numbers to lower. So what S is doing is sort of feasting on all the Nortons and the McAfees, and I've even heard that they're taking share from as good a companies. Probably not a lot of share, but I've heard that they're actually taking some share from CrowdStrike and stuff like that. So, but yeah, look, I mean, this is more of a grinder. I actually like charts like this. So got lows, May lows, held the May lows. June low was so far successful retest, but this thing also didn't do one of these 20 to 45 in 2 weeks and give it all back, right? So this is acting sort of rational. It's grinding. Honestly, it looks like this is under some amount of accumulation. Like, I wouldn't be surprised if funds were buying this stock, selling other things and buying this. On a net basis, clearly it's held better than lots of other stuff. So this would be, I would say this is probably maybe a better version of Rely, to be honest. But it's a different space. I do like security. So this is a security name.
You like that one? Okay. Let's go to some of the cybersecurity stocks here that have had some moves. Is there any particular favorites that you have in the cybersecurity space? I'm looking at Palo Alto. Had its split and it's come down a little bit. And I know you got Zscaler in here. You got CrowdStrike, which had the big gap up. At any ones you like in the cybersecurity space?
Yeah, I mean, I think I probably like the more, like, this is an area I think you can. The stocks they do have some institutional support, even in some of the mid cap ones. I like CrowdStrike a lot. I thought about buying it. It didn't stay low for more than about 15 minutes on any one low day.
Okay.
Palo Alto is probably the one that's like the most loved. That's probably the one that I'm probably the least interested in. So if I had my own little mini ETF basket, it'd be like Okta, S, Varonis, VRNS. CrowdStrike would be in it because that is a top name. I don't love where it's trading, but
all right, Sean. I got to interrupt you here for a second.
Yeah.
Aaron, you got Gene on the background. We're gonna bring him in audio only. We have Gene Munster, the managing partner at Loup Ventures. Been following tech stocks for a long time. And Gene, can you hear me?
I got you loud and clear, Joel.
Hey, all right. Well, I've been thinking about you, Gene, because the last time we were on, a month or two ago, the market had a nice rally, and you were still underinvested. And you called this one. You said, I think there's some declines coming here in September for whatever reasons, inflation, earnings. Well, here we are. Thanks to some earnings warnings from some big companies, interest rate hikes by the Fed, which are kind of we're expecting. Now we've come back down. You kind of SOH sitting on hands, or is this kind of the area or near the area where you're looking to come to deploy more assets?
We're getting near the area, and it's probably helpful to numerically look at what we've done with the fund. When we talked, we were just over 50% in cash last time we talked. That number is now 35%. 15 of that, so we've effectively deployed just over 15% of the fund in the last month and a half. 15% of that, so the vast majority of it, 95% of what we have deployed the last month and a half, has been into private markets. They have had some pretty material changes to their valuation, just like the public markets, and so we saw an opportunity there. So from the highest level, we really haven't changed our public equity position, and we're still a third in cash. A conservative fund would be 5, maybe 10% in cash, and so we're still not there. We are not buying today. We know that the time to pick that bottom pixel on the chart is when it is hardest to be buying. That's the point of capitulation. But there is some indicators just in terms around like the VIX, for example. We still haven't seen that elevated VIX. And we generally believe that 2023 is going to be a good year for tech. That still remains unchanged. And we think about kind of deploying through the next few months. We had talked before about fall time as kind of the bottom forming. That's probably been pushed out a month or two, but we are in a camp that, again, we're going to, we're getting close, which again begs the question of what is that moment of when we kind of say now is the time. And the answer is we're not going to have that moment. We're going to have a period where we will kind of average into what we think is the bottom of the market.
So you'll so like you've already like determined on a day like today that you're just gonna set out ending the week on a Friday. Well, you always end the week on a Friday, but settling on the lows of the week. So it's just more like that decision is made
Decisions
before the
made.
days. Yep, the decision's already made. So all right,
And
well,
part of that, just to kind of fill in the blank there, is that we're still we still got a lot of money invested, and so we still want the market to go up, and so we that's a piece to it, and it's less about entering the weekend. You can kind of play this forward. You can see the market rally intraday and then probably fade going into the close, given some of the new dynamics related to Russia, Ukraine. And but what the real factor for us is, it's more about what's going to happen around the September quarter, the December outlook. And so that's still a few weeks away. So we're probably going to be sitting tight for weeks unless we just see some crazy negativity in the VIX.
oh, okay. And so let's talk about Q3 earnings season coming up and your expectations. I mean, overall didn't you feel that like a lot of companies like got a pass for Q2? Someone like, well, they're not getting a pass now. Someone like Google, not the greatest numbers. The stock still did rally a little bit. Well, what you're thinking that they're not quite gonna this time around they're not gonna get the free pass.
Yes, I think that's the general view, in part because what got them the free pass last time was to say that when they said that they didn't necessarily think that things were getting worse, or I forgot the exact language, but it was pretty ambiguous, but it wasn't clearly negative, therefore it was a positive. And in this case, we have the new dynamic around trying to read Powell, and you can look at all these factors, all the indicators, leading indicators. They've been negative for 6 months. Economic leading indicators. You can look at earnings. You can ultimately, we think that it comes down to a pressure point, and this comes back to how investors, we think, are going to interpret the December guidance. Is the pressure point is inflation, and it's pretty clear. Even if Powell is trying to show a poker face and be as hawkish as possible just to get people to believe it, it's pretty clear that this dual mandate is off the table. The mandate is to reduce inflation, and the Fed will deal with the consequences of unemployment when when inflation is under control. And that's a stronger, longer message. That's the higher for longer kind of takeaway. But in the context of December results, I think if you have just unapologetically strong results, I think these companies will get credit for that. But this pass that we saw in the June quarter probably doesn't happen because investors will sit back and say, Google gave kind of flattish guidance or commentary. They don't give guidance, but kind of flattish commentary about the December quarter. But we have this backdrop of this hawkish Fed that is unprecedented, that just kind of takes some of the momentum out of that stability.
All right, I got Sean Udall on the line with us also today, Gene, and I know we had a back and forth a couple months ago with him. And Sean, you got any questions you want to throw at Gene?
Yeah, hey, nice to hear you again, Gene, and see you at least see you on phone voice here. I do. So you had made an interesting comment that you had invested more on the private side than the public, and it seems to me, I'm just curious. It's kind of a two-parter. The first part being, it would seem to me that public equities are heavily, I mean, I would almost say massively discounted versus private equity. But did you see like such a large discount in a couple targets that you decided to go the private side, or am I mistaken that private equity has dropped as much as public equity and nobody's talking about it?
You're right on, is that it has not happened, that private equity hasn't had the same correction. I think the difference here, what got us intrigued, is that typically private equity doesn't have that the full correction, because you can't get this vortex of short sellers and just headline concern, obviously, because you're not marked to market.
That's right.
Daily. And so it's typically what you will see is that the valuations in the private, they come down, but they'll usually bottom 10-15% below where the public ones. So we're never going to get there. We're not quite at that down 10-15%. I think a safe number is to think about from its peak. Private equity is down 20%. Some of them are down 50%. But it's, if you look at NASDAQ, down just over 30%, and some of the other growth indexes down 40-50%. We haven't seen that in private equity. So then the question of why would we do it? Why, if we're so negative, and why would we decide to invest in these companies? And the answer is that there are a handful, and we can't disclose which the companies are, because they've got some policies around how they disclose their cap table. But they're just what we think are just some of the juiciest growth opportunities, and we're comfortable at still underwriting that at below fire sale prices, just because we believe in the companies long term. And some of these companies won't be public for, at the earliest, 2 years, more likely 5 years, and so it just changes the dynamic around valuation.
Got it. So it's almost like it's sort of a place that you can store value, because you don't have to deal with the mark to market every day.
Exactly. That's exactly right. We think we can take advantage of the market and with some aspect versus not doing anything, and the market comes back next year and we're paying up again for some of these assets. So you're right. It's a way we can put money to work in a way that we think we're getting value for our LPs, but at the same time we don't have the wicked emotional swings that we're seeing. I mean, it's just I was floored a week ago at how the emotion is rifling through these companies, and I've just lost adjectives to describe what it's like now.
Yeah, there's been during the CPI, that 90-minute, 1-minute bar, and then some of the other things that we've had. Christopher Marin's asking, and we know you're in tech, is there any particular sector of the private equity market that you invest in? I know you can't disclose the companies, but forward looking, can you just?
I would just say, there's some bigger, we call them undeniable truths, undeniable trends. I think that I can just tell you the bigger segments. I think that national defense is an important place, and I think the basic trend is onshoring, whether it's and countries starting to focus more inward. Over the last 40 years, we've been this globalization phase, and we're starting to move back to countries kind of relying on themselves more. I'm reminded of my very basic economics class and the kind of one of the agreements about comparative advantage, that if you just focus on what you're really good at and let other countries focus on what they're really good at, everybody wins. I don't know if comparative advantage is going to win in the next few years. That creates opportunities around national defense, new ways to think about national defense, security. I think it also, just if you think about just bringing more tech back to the U.S. more broadly, this is outside of national defense. I think there's opportunities there. And so we're going to be able to say more later, but those are kind of we're rifting off of that theme about onshoring.
All right, two things I want to hit on before we go. First of all, Dennis wanted to be on. He is out. He's out sick with the Rona, but he is just he fully hedged his Apple position. He didn't want to pay taxes on it, and he's worried. He's been worried about the market, and correctly so. He's been excellent on calling the dips and the rallies in this market. But he's just worried that Apple's going to have one of those quarters where they lower guidance or they don't make as much money. Give a little bit. He's more worried about the PE. It's still trading at the highest valuation. I know you argued for a long time that it didn't get the proper valuation, and it did, and that's when it had a considerable run. Now that the valuation, at least from multiple, has caught up to itself, what can we say to assuage his fears?
Well, the thing that makes me most concerned is that I'm not concerned about it, and I think it's like a sense of like this. Everyone's going to get hit by this, and of course, if you just want to pick the pressure point on Apple, it's the iPhone, and
everyone has one.
Everyone has one. It's getting the iPhone right, I think, is going to at least determine the stock over the next year or two. I think ultimately when they get into different product categories, that's where it probably drives it further longer. But at least the near term, it's think about the iPhone. And this has been really well documented. We've done our own work on it too, that basically shows that the iPhone, the new cycle, is off to a good start. We're only a week into it. And so trying to look at lead times relative to what the product is going to do over the next 12 months based on 5 days of data, 7 days of data, may seem like it's reckless, but there is a history of looking at the lead times, and specifically when lead times increase. It's not the actual absolute number, but I would say to Dennis that I actually feel really good about Apple. I think that they're going to largely buck the trend. And again, piece that makes me most nervous is I think most people are thinking the same thing. What happens if I'm wrong? Where does it go if I'm wrong? You probably get back to that 125.
All right, one other one that you got me in single digits here that I've been trying to hold on to. Livent Corp got up, made a new all-time high yesterday, showing an excellent relative strength. Got hit with the market back at the down to $1.38 today. Sticking with it. I just been with it for a long time. Stalling. Yeah, I remember talking about this in single digits. Any final thoughts on LTHM?
Lithium's a big deal, regardless of how you think about the batteries, like the chemistry of batteries going forward. Lithium's going to be one of the core materials within that, and so they're a miner. I think that long term, they probably have some headwinds about different ways to extract lithium from the earth, but over the next few years, I just think can't get enough lithium.
Okay. All right. We are coming up on 9:15 here. Gene, thanks a lot. A lot of great information.
Thank
you. Yeah.
Hey, Joel.
Yes, sir.
Can I squeeze in a zinger for Gene? Just
one. Quick one. Yep.
Okay, Gene. 2013, you and I both thought Apple was crazy. Is there a stock, maybe like Intel, which would be a similar setup today as Apple was in 2013?
Probably Meta. The old
Okay.
Facebook.
Oh, okay.
I love it. I don't know if you heard us, but I said it's getting crazy cheap. So
Yeah, I didn't hear that, but yeah, we own Meta. It's cheap. They got a product that's not good for the world, but it's good for making money, and so I think Meta's that
All
one.
right, we
That's
got to
all I
wrap
had.
it up.
Cool.
Wow. Wrap it up on that note. Gene Munster, managing partner at Loup Ventures. Sean Udall filling in aptly for Triple D. Folks, let's have a good day. S&Ps are rallying off that pre-market low. Let's see if that can be defended. Ending the week, I'm out on Monday for the Jewish holiday. Back on Tuesday with the full crew. Everyone, have a great day. Thanks for participating.
thanks, guys. See ya.